You're watching the latest financial news with VEVOFX. It's Wednesday, the 25th of October, 2023. Today, we're going to take a look at some intriguing financial news covering Norway's massive sovereign wealth fund. This fund, established in the 1990s, was designed to manage the surplus revenues from Norway's thriving oil and gas sector. Over the years, it's become a global investment heavyweight, with holdings in more than 9,200 companies across 70 different countries. So let's dive into its latest quarterly report. Well, the fund reported a 3.3% loss on its investments in unlisted real estate, and renewable energy infrastructure didn't fare much better, with a 2.4% loss in the third quarter. As of the end of that quarter, equities accounted for 70.6% of the fund's investments. That's a slight decrease from the previous 3 months. According to Norges Bank Investment Management, the branch of the central bank responsible for managing this colossal sovereign wealth fund, its market value as of September the 30th stood at a whopping 14.801 trillion NOK, Norwegian kroner. So, what's caused this recent dip in performance? Well, Norges Bank Investment Manager's Deputy Chief Exec, Trond Grande, provided some insight. He mentioned that the stock market experienced a downturn, particularly impacting the tech, industrials and consumer discretionary sectors, all of which had a negative effect on the fund's overall returns. So let's take a look at a quick breakdown. Now, equity investments took a hit with 2.1% loss, fixed income investments followed with a 2.2% loss, unlisted real estate showed a 3.3% loss, and unlisted renewable energy infrastructure contributed to a further 2.4% loss. Now, another factor worth noting is that the Norwegian kroner actually strengthened against several major currencies during the quarter. And this currency shift decreased the fund's overall value by 264 billion NOK. Now, bear in mind that $1 is currently just a whisker over 11 Norwegian kroner. Now, in terms of the fund's investment portfolio, it was divided as follows: 70.6% in equities, 27.1% in fixed income, 2.2% unlisted real estate, and a smaller 0.1% in unlisted renewable energy infrastructure. And despite this financial setback of 2023, the fund managed to outperform its benchmark index by a slight margin of 0.17% points. Trond Grande, the Deputy Chief Exec, acknowledged in his words the stock market exhibited a weaker quarter in comparison to the preceding 2 quarters, shedding light on the challenges faced by the fund during this particular period. So, moving on, the total market capitalization of global stock markets has reached an impressive $112 trillion as of July 2023. That's a substantial increase of $14 trillion from the $98 trillion mark at the close of last year. And these figures come from a September 2023 report by Statista Research, and they paint an intriguing picture of the current state of the world's financial markets. So let's take a closer look at the United States. Well, the combined market cap of the New York Stock Exchange and the Nasdaq, 2 of the most prominent stock exchanges in the US, stands at a staggering $47 trillion. And that's a substantial chunk of the global market just right there. Now, shifting our focus to the dynamic Asia-Pacific region, stocks listed in this part of the world are valued at an impressive $34 trillion. So it's clear that this region also plays a significant role in the global financial landscape. Now, just as an aside, here's an interesting piece of information. In February this year, NBIM made headlines by selling $200 million worth of investments in Adani Group companies. This move came during the Hindenburg Report sell-off, and it made quite a statement. Christopher Wright, NBIM's head of risks monitoring, confirmed that they now have no exposure left in the Adani Group. But back to the heavyweights in sovereign fund management. Now, Abu Dhabi Investment Authority, that's the ADIA, stands out as the largest in the Middle East and the second largest globally, managing a massive $1 trillion in assets. Saudi Public Investment Fund follows with $700 billion, and the Qatar Investment Authority with $500 billion. Singapore's GIC is another notable giant, holding $770 billion in assets as of September this year. So as for the Forex market, it's continuing its current trends as we've seen no significant impact to cause any reversals in these trends, which means further weakness for the euro, particularly against the dollar, and other currencies trading against the dollar. So there you have it, the latest on Norway's sovereign wealth fund. And do let us know your thoughts in the comments below. And if you'd like to keep up with the latest Forex news, do click on that subscribe button. And why not give us a like whilst you're at it. But in the meantime, thanks for watching and we'll see you next time. This has been the Quick News brought to you by VEVOFX.